Welcome to the May 15th, 2023 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group Wealth Management, with your fast-paced weekly tour of the global financial markets. Your financial weatherman. McGowan Group Wealth Management produces this video and the research that goes with it. You can contact us at networthradio.com to set your time for a brainstorming session. This is the team you want on your side, and this video is proof that we are doing our homework, staying in touch with the global financial markets to help you make great decisions as an investor. The first subject I'm going to cover, and I'm going to cover it in depth, these are some things that you probably have not seen at all. And some of these charts you just can't get anywhere else. Now, we use Bloomberg because it makes us look smart, but they also do great charts. And then I've got some other intelligence reports built into today's video. Be sure to subscribe because we will update you when there's fast-breaking news in the global financial markets. The first breaking news I'm going to cover is a huge positive, and I want to cover some of the possible outcomes this summer and for the rest of 2023. What's this? This is inflation. Last June, inflation trailing 12 months was 9%. That was the big story. The Fed tightening. And we were all back to the 1970s, wearing bad leisure suits and in a recession. That was the premise. So far, the recession hasn't materialized, and I'll cover something important about that looming recession clickbait headline that you see everywhere. Now, what's this? This is inflation going from 9.1, most recent report trailing 12 months 4.9. What does that tell us? That's disinflation. That is great for the markets. In fact, in the 1970s and in other cycles, as soon as inflation starts down, disinflation, you tend to get a major rally. Now, the Fed tightening cycle, they're currently at 5 to 5.25. Well, they now have a rate that is actually above the measures that are coming in. And here's one. This is producer inflation. That's like companies, right? So here, even with 6% year-over-year wage growth, which is great news, not consistent with a recession, by the way, look at this. Producer price index went to 18% trailing 12 months. That's humongous. 18%, now it's 2.6. In other words, inflation's already disappeared for producers on a trailing 12-month basis. In fact, it's been that way since about July. In other words, inflation for the past 9 months is essentially at the Fed target. What does that mean for the rest of the year? Look at this. The two big inflation months after the invasion. May was the fourth biggest month of inflation, near 1%. June was 1.2%. That would annualize at 15%. 1970s panic, recession, horrible things. So, look at that. July, it essentially disappears, goes back to about normal. What happens over the next 60 days? Well, we get to mid-July. These two humongous months drop off. That's going to shrink the trailing 12-month inflation by as much as 2% over the next 60 days. That's a completely different picture from what you've been hearing and worrying about. Now, let's get to the recession topic. This is rent, okay? We have a recession for rents. Year over year, mid-price, the inflation rate's gone from 17 to 5, and at the same time, you see the CPI right there. What this chart is telling you is now rent is coming down. That's going to squash inflation as well. Here is the Dow Jones Industrial Average year to date. Now, at the beginning of the week, we had storm clouds. U.S. Treasury Secretary Janet Yellen, she's going to default. She didn't even talk about a partial government shutdown, which is what they've done in the past, and nobody notices it because it just means you can't go to Yellowstone. Well, in this case, Here, you could see the March 15th low with the banking crisis. And the week began with the fourth California venture capital focused bank, because venture capital's just dried up completely now that you don't have the tech boom, right? Because the NASDAQ is still down about 25% from the peak of 2021. Well, anyway, we hit that low point when the first three banks failed. PacWest looks like they're next. They're in hospice this weekend, so they might not be around Monday morning. Anyway, then you get a nice relief rally. This week, with the storm clouds of PacWest, the default discussion, which is just Washington kabuki theater brinksmanship. Warren Buffett said, they'll work that out. And in the meantime, he bought some treasuries at a good yield. So he's obviously not worried about it if he's buying some treasuries at a good yield. This is the Fed funds rate, the Fed tightening cycle that tortured the markets for 16 months. Now they're back here. Last time they were there was 2006, 2007. They might have stayed there a little bit too long because all hell broke loose and you started having mass defaults. This banking crisis, how is it different? Back then, you had a real estate nationwide frenzy and you had the adjustable rate mortgages. We also was way overpriced real estate, people buying a second home and a third home and bragging about how much money they made. Sound familiar? That sounds like 2021 and all the way through mid-2022. Now the Federal Reserve, what's normal? 2 to 3% like inflation, and treasuries at 3 to 4%. The treasury market seems to be predicting we're going to go back to normal. I just said the inflation is likely to drop over the next 60 days, even though it's already reduced. Fed is headed back towards normal at some point in 24, and the markets may begin to anticipate that. Did they cause a recession? This is the Atlanta Fed real GDP now. It was right in the fourth quarter. It was right in the first quarter. What's happening here in the second quarter? These are the blue chip learned economists. Their consensus is in Bloomberg. We've been watching that. As of the beginning of April, they were saying, the second quarter, see below zero? Well, we're going to be in recession. Oh, that's bad. That's what everybody's worried about. Now they've come back up. Not so much a recession. Atlanta Fed gathers the data every single week and updates this, and they were right in the fourth quarter, they were right in the first quarter. For this quarter, they say GDP at 2.7%. Not too hot, not too cold, and it's good for corporate profits. This is corporate profits and the forecast. There's your pandemic, that's bad. Here is 9 months of reduced earnings, almost a year. Earnings estimates may come down. Earnings did drop. They're 3% below this time last year in the first quarter reports. What happens next? Even if this is only half right, the analysts are saying 25% gain in S&P 500 earnings by the end of 24. I hope I've given you some reason for optimism to find bargains. And if you want a written plan from McGowan Group Wealth Management, you want to get us on your side. We serve affluent families right here from the Crescent in Dallas. I look forward to our brainstorming session, which you can arrange easily. Just go to networthradio.com. Thank you for tuning in to Net Worth Media today. And our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the net worth media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.